What is up, guys? Welcome back to my channel. My name is David Hanlon, aka The Laptop Legend, and in today's video, I just wanted to talk about 3 mental changes that made a world of difference, transforming me from an unprofitable trader into a profitable trader. And I'm not an expert by any means. I'm still learning. There's a ton to learn. I'm working on a lot of different things, but I've come a very long way in the last couple of years from losing money consistently to now being consistently profitable in trading. And I think these lessons could be really helpful for a lot of people who are, beginners just getting into trading, or also people who are, I guess, decently profitable this year, but want to take that to the next level. So hopefully you find this information helpful. If you do, please remember to smash that like button down below. Take a sledgehammer and destroy it. I would appreciate that a lot. It helps out the channel. And yeah, let's get into it. Also, if you're wondering why I'm wearing this fluffy jacket, it is because number 1, it's really cold in Missouri. It was snowing earlier today, so it's kind of cold in my basement. And number 2, this is actually one of my first $100,000 products ever in e-commerce. So I just wanted to rep it for you guys and remind you that, e-commerce is still a good way of making money. I'm still running my stores. And yeah, if you have any questions about e-commerce, definitely go check out some of my older videos about e-commerce. So yeah, all right, now let's get into it. All right, guys, so I'm here at my computer just to explain a little bit better, and the number 1 thing that will transform you into a profitable trader is buying when other people are selling and selling when other people are buying. And this in a context means you want to buy into weakness when the stock is, there's a lot of people selling, there's panic, and you want to sell when there's a ton of people overexcited buying. And this is actually a concept that's been around for a while, but a lot of people really don't think about it, and they like to hop on these hype trains and get way too excited about stocks. Warren Buffett, the greatest investor of all time, he's been quoted saying, "Be fearful when others are greedy, and greedy when others are fearful." So this is pretty much the same concept here. And I've got some charts to help illustrate why you want to be like this. So when I see massive spike ups like this, or like this, or like this, I'm not thinking to myself, man, how far is this going to go without stopping? I'm scared I'm going to miss out if I don't buy in this. I'm thinking, when is this going to crash? And if I buy now, how much could I lose if I did that? And because of that, it's transformed my entire concept of trading, because there's a lot of strategies revolving around breakouts and buying stocks that are moving on to new heights because there's great volume and great potential to continue running. And I agree with that. I think you should trade stocks that are up 100, 200% on the day. There's a lot of money to be made there, but you need to do it intelligently, and whether or not you're going to be profitable depends completely on your entry on the chart. So you can see here, if you buy here, because you're like, dang, it's going to break $1.50, it's going to break $2, you're going to end up negative because you're getting in way too early, and you're getting in right at the peak of the hype of the stock when everyone is buying. You want to wait until there's some selling. If you wait until here, you can get out with a profit. If you wait until here, that's a really, really good entry. And that's a way better entry in general than buying at the top here. And there's so many examples of this. And for me, the biggest thing is managing my losses and limiting them, because if you have negligible losses, your account's just going to grow from the profit that you do make on those good investments. And here's another example. This is one where, look at this chart, man. This is probably the craziest chart I've ever seen. These are 1-minute candles. You can see the price here, goes from 130 down to 45 cents, 43 cents. I'm trying to figure it. Yeah, call it 45 cents. There's someone who panicked here at the bottom because they were selling when everyone was selling, and they got executed here at 45 cents. The next minute, it was back over $1. Can you imagine that if you had $10,000 in there and you freaked out and you sold down here? This is why you need to be buying when other people are selling. And again, this is going to transform your trading, and it's a difficult concept to grasp, because you see stocks going down and human nature is like, ooh, I don't want to touch that, it's going down. But that is when you are the most likely to be profitable on a trade. The more it's gone down, the more likely it is to come back up. And the more it's gone up, the more likely it is to fall. So you need to watch out for that. This is another example, just a great trade. I just wanted to highlight this because, it tanked down a lot. I bought in here when I saw it starting to flip. So you can also wait for that, wait for some buying to come in after a lot of selling. I got in here. I didn't even have that big of size. I got in at 15 cents, and I sold up here at the first red candle, at 24 cents. And I made, you can see here, I guess that might be cut off, but I made $2,000 on this trade, and I could have taken way bigger size and made $20,000. These are the types of trades that I really like, because the risk to reward is really there. After it's gone down, If it doesn't go your way immediately, you cut losses. And that takes me to number 2. Cut losses extremely quickly or extremely intelligently. And you can kind of do both at the same time, but a lot of times they're a little bit mutually exclusive. So let me explain what I mean by that. So if I go back to this chart really quickly, on this chart, you might want to get an entry, say right here. Maybe you like what it's doing here and you want to risk off of, you want to risk off of this. You either want to risk off of this and cut immediately, or cut immediately when it goes against you, or you want to risk off of this and avoid getting chopped out. There's no in between, because when you're in between, that's when you're going to end up screwing yourself over, because you're going to sell mid-range before the stock bounces off support, and then you're going to end up getting out of a trade that would have been profitable if you'd held. And I like to cut losses extremely, extremely quickly, because that limits my downside risk as much as possible. So if you cut this trade, say you want to get in right here and you cut it here because it falls down, but then it goes back up and now it's at your entry again, you can get back in and you didn't really lose too much. You lost a couple cents and you're back up here. But if you want to get in here and you're going to cut here, but then it comes down here and you're getting a little squeamish and then you cut early and then it just bounces against you, that does not work. So you really need to make up your mind whether or not you want to cut extremely quickly as soon as the trade goes against you, or wait for it to break some key support level. Because if you pick your support level well on the chart, a lot of times it's not ever going to break that. And even if you're negative for a little bit on your position, it will eventually go the way that you were expecting. So that is one of the most important concepts that I want to talk about, cutting those losses quickly. Because when you have big losers, they absolutely destroy your progress. And I have a really, really good example of why you need to cut losses quickly and you can't be a bag holder on companies that are probably going to zero. And this was my first bag holder trade ever. And I promised myself I would never have another one like it afterwards. And let me pull it up here. So you can see this company was Paragon Offshore. It used to trade on the New York Stock Exchange back in 2015. And it was a very undervalued company. I think it was, I want to say it was, yes, you can see, this might not be the same stock, but I'm pretty sure this stock was trading, in the 50s, something like that. Just crazy high, big valuation. This was a huge oil company, and it ended up going down significantly. And I bought it, as a dip buy, as a value investment, because I thought it was undervalued. The market didn't recognize the value. So, if it goes from $50 to $1, if it bounces up to $5, that's a 500% return. That's great. But what ended up happening was this company ended up going on the OTC market. They ended up listing as PGNPQ, and their stock, it just went to zero. It literally went to zero, and then they filed for bankruptcy back in, I think, 2017. They got suspended off the New York Stock Exchange. They had a ton of debt, and they just went to zero, man. And all the money that I put in there, it's gone. I never got it back because I was too scared to admit that I was wrong and cut my losses. So I have no issue at this point, because of this lesson, admitting that I'm wrong immediately. And sometimes, I probably cut a little too quickly, but to me, I'm okay with that, because I know that I'm never going to have a big loss like this, because I always cut my losses quickly. And, that's another thing that is going to turn you into a more profitable trader. Because if you have $5 losses here, $5 losses here, and $50 gains, you're going to be profitable overall, and you can scale that up as high as you want. But if you have $50 gains, $200 losses, it doesn't work out. So that is my biggest, probably second biggest lesson, I would say. That's probably my second biggest lesson. You have to combine these strategies. Buying when other people are selling, but then it keeps going against you, that can happen sometimes. So if you dip buy here and this keeps tanking, cut and get out and be prepared to re-enter, because that is the biggest thing that is going to prevent you from being profitable, is not being willing to admit that you're wrong. So if you have an issue with using day trades, definitely check out my video that I just uploaded on how to have unlimited day trades, because I remember I didn't want to cut losses sometimes and admit that I was wrong when I only had 3 day trades and 5 business days. So definitely watch that video. It's really helped me transform and be able to cut my losses a lot more quickly. And then the last thing is the execution of your plan is more important than actually making profit on it. And the reason for that is this is a long-term game, and it's based on statistics. If you have an edge in the market and you say you were flipping a coin, but it landed on heads 55% of the time. If you took that bet 1,000,000 times, you would make so much money. But a lot of people don't have any type of system, so they don't know that if they have an edge. So they might learn the wrong lesson by chasing a stock, buying right up here and then, oh, I sold here. Great, you made a little bit of money. But in general, statistically, is what you're doing profitable in the long run? And that is what I always ask myself right before I'm about to get into the trade. I say, could I make money on this trade? There's a chance that I could, FOMO is hard to get over, but what's more important than if I'm going to make money is, will this be statistically profitable in the long run? If I take this trade 100 times, am I going to be profitable more times than not? And if the answer is no, don't take the trade, man. That's what it comes down to. So think of it in terms of statistics and think about it in the long run. It is fine to miss out on profits because there are always more opportunities. But what is not fine is to get in the habit of taking bad opportunities, because that is going to turn you into an unprofitable trader. And this is still something that I'm working on, because FOMO is something that every single trader deals with. When you see a stock that you wanted to get in right here and it goes up to here, you're like, oh man, I should have bought. Well, I'm going to buy now just so I don't miss out on the remaining gains. But the entry is super important, and if it's not a good opportunity anymore, don't force it, man, because it's not going to be statistically profitable in the long run, and sticking to your plan is the most important thing. So those are my biggest takeaways. Go watch the video again if you need to, because these literally transformed me from an unprofitable trader into a profitable trader. And obviously, I still have a lot to learn, but I'm excited to continue to grow and hopefully share some more of these lessons with you guys. So if you made it to the end, again, you're in the 5% of people. Really, no one watches the end, but I appreciate you, and subscribe if you have not already. I'll see you guys in the next video, and you know the drill. Let's grow better together.
Besar tu boca si te despiertas, mi tiempo también es tuyo porque me inspiras. Solo quiero que seas la única que así me mira.